Good Friday morning, everyone. Big day for the markets with these tariffs. Jim Cramer is here on the floor of the NYSE. Jim, let's get right to it.
Right now, I have a 10-part piece in Real Money this morning about what you have to see, where you should go. Somewhat elaborate. I have historically liked not to call bottoms, but to show you how bottoms are reached. And we'll be looking at certain stocks to be able to say this is the moment. We have a highest cash position we've had in ages and for action alerts, so we have to be on the lookout. I'm not saying we're Warren Buffett, but we have been calling for a very big sell-off. We sold some stuff, and that's what I want to do, and I've got some of the details of how to do it in Real Money. I do want to point out that a couple of my favorite stocks are going to get hit very hard or being hit. Boeing, natural place to go. And I'm just going to use this as a metaphor because I think people really don't understand that we hold more cards than you think. It is a multi-year issue to try to get planes. The Chinese need planes. They can't cut off their nose to spite their face. They can't go to Airbus and say, listen, we're going to switch, because Airbus doesn't have any planes either. So the industry that has the most aluminum in it, in terms of an aircraft, that's the big consumer. You're wrong if you think that you should sell Boeing, but Boeing then again was at $279 on December 7th. So understand that the stocks that have been winners, this is where I'm going, are the ones that can come down hardest, and then we have to pick among the rubble. But I want to emphasize to you, I'm buy, not sell. But not yet. We're not oversold. I've done a series of pieces about the S&P oscillator. We're really just kind of flat. The VIX clowns are back, and they're in there with volatility, and they're short volatility, and they're getting killed. Let's have all of that wiped out before we go in. But remember this. I'm going to ask you a question. What does the price of steel have to do with the price to earnings multiple of Bristol Myers?
Very important point. But just to continue with Boeing, when you talk about Boeing, it kind of makes the retaliation fears a bit overblown, right?
Well, look, where do they retaliate? Historically, they retaliate in agriculture. Well, I mean, a lot of people are going to say they're going to retaliate with Apple. Could they shut down Apple? Could they shut down Starbucks? I think these are very visible, stupid things they could do. I think that the reason, let's understand, there's a lot of misinformation going around about who is producing the most steel that's being dumped in our country. It's not who's producing the most steel that's coming into our country. It's about overproduction of steel, which then drives down the price. And at the heart of that, as John Ferriola has said eloquently, the CEO of Nucor, both on Mad Money and to his Commerce Department, is China. China produces by 700 million tons. Okay, so everybody's price is brought down. Nucor is the low-cost producer in the world, but that doesn't mean that you get the lowest cost steel in the world. That's because the Chinese have made it so the pricing umbrella is so bad. Those of us who have watched what the Chinese have done, my father worked for 3 companies, all wiped out by the Chinese. I say wiped out because the Chinese flooded the gift-wrapped industry that my father was in before he decided to work for the Chinese because he had finally had it. We see these patterns. We recognize what the Chinese can do, which is why I have historically been on the side of modified free trade. Dan D'Amico, I am proud to say, is a friend of mine. I've worked with him many years on this. There are issues that I have had, and historically, from being when I was a shop steward to being when I led a wildcat strike, I feel very, very importantly that there are issues involving labor. But there were 600,000 people in the steel industry in 1990, and now there are 300,000. Is it important, I think, as a statement, to say to our trading partners, particularly, by the way, Korea, not just China, Korea buys very little of ours, is look, those days are now over. You've been killing us. It's been a trade war. We've chosen not to fight back because we want to sell a lot of toothpaste and we want to sell a lot of diapers, and those days are over. Now, actually, they won't. You still can buy. You can still buy Procter & Gamble, and a quarter's not going to be that good. But I do believe that those who think that China is going to fight back may misunderstand how important it is to have our market. We tend to think it's all one-sided. It's not.
We're going to talk more about tariffs in our exclusive ActionAlertsPlus.com call, so stay tuned for that. But Jim, there are reports that Gary Cohen was against these tariffs.
Yes, no, this is an issue. Gary's an old friend of mine. I have always felt great about Gary being in there. I worked at Goldman Sachs. Gary worked at Goldman. And Gary's a friend, and he's a steady hand, and was behind a lot of what happened with the tax program. And by the way, I think the tax program, I favor higher stock prices. The tax program is pretty good, even though my taxes went up big. That's not the point. But you don't want to see Gary leave, because Gary is at the table, and Gary can argue some things. You want rationality. I'm not saying the president's irrational. I am saying that the president's a lot bluster at times. I don't think, by the way, these were at the high end, the tariffs. 25 and 10 were the high end, actually a little bit higher than what I thought was going to happen. So let's not minimize these, but I feel very, very strongly that if Gary leaves, that's a reason that people would pause and say, I'm going to take profits in XYZ.
And Jim, it's interesting timing to get these tariff announcements when we have Foot Locker's earnings this morning. Any analysis?
China has been the great market for Nike. Foot Locker's numbers were clearly disappointing. By the way, Nordstrom, Action Alert's holding. I actually want to buy that on the weakness, but Foot Locker was surprising because it's a reversion to the way Foot Locker was before the last quarter. I think some people might make a read-through to Kevin Plank, who was on Mad Money this week, Under Armour. Under Armour's the whole inventory situation was lean. I think it's a bad read-through to dump it. Dick's is a more important outlet, by the way, for a lot of the apparel that Under Armour sells. And Under Armour, I think, is in better shape than people realize. If it comes down, it might be a good place to go.
And with J.C. Penney,
by the way, big China business.
Sure. With J.C. Penney, they had comp growth, but missed estimates.
Well, J.C. Penney is kind of I'm not saying it's Sears. A lot of people work at J.C. Penney, but I come back to the great numbers of Macy's and what Jeff Gannett is doing, and he's really terrific. By the way, I am a little discouraged by how Walmart's doing. I had thought there was a real deceleration in e-commerce in Walmart, and that means that Walmart has to spend more. And I am encouraged about what Target's doing. Now, they report March 6th, but I think Brian Cornell is doing a lot of very creative things. The new store format is just pure joy. I don't know if you've been there. Target, if it comes down in this market-wide sell-off, interesting place to go.
All right, Jim, and I'm sure you're going to be covering these tariffs on Mad Money tonight.
Yeah, we'll get to it. Absolutely.
All right, that's 6 p.m. Eastern. Jim and I are going to continue to talk about stocks and tariffs in our exclusive ActionAlertsPlus.com call. Join us there.